Hello, dear traders, ladies and gentlemen. Welcome. It's wonderful Monday, right? So we are starting our trading week and our working week. The what is it? Is it like It's the third week of February, right? So we are in the middle of February, right? We have 28 days in this February, so that's why we have. That is why, we are in the middle of February. Wow, and 1.5 months into 2023. So, how has your trading been going on? Do you have any stories to share? So, it will be very, very interesting to hear interesting information from you guys, and in general, to maybe you have some thoughts, some ideas to share. So, feel free to do it. Hello, Thomas. Nice to see you, mate. Hello, Madhav. Hello, Akpak. Good evening, good morning, good afternoon, guys. I know we have traders from different parts of the world, different time zones, and I'm sorry. So, guys, first of all, on Friday we got this nice little update here, which is which makes everything much more convenient in when you trade from your desktop. And so in the desktop version, so we got this fixed time forex and finally our stocks portfolio. They are all in different parts now, and they are not a mess as they used before. So we have now the history of trades. You can see it here. We have a lot of green color lately, so that's very good. Orders, so they are not as they were before. So active trades here, forex trades are all here. I can open history, have some profitable trades, some losing trades. Now, since I started talking about forex, guys, and I'm now showing this history of trades tab, we can notice that yes, I have losing trades, but I also have profitable trades. And if you look at my profitable trades, you can see that I try to maintain this ratio of my risk, my stop loss equals my take profit equals 4 stop losses. So so that is a very good ratio that allows me, even with say 50% profitable trades, to gradually increase money. So I had a few losing trades. Yes, I'm not hiding them. Here they are, my losing trades. But with one profitable trade here, I managed to cover up the losses of these 3 trades before. So for example, here from 3 trades here, I lost something like 22, so $2,200, $2,250 more or less. And then I managed to almost cover up this loss with one profitable trade on the pound here with plus 2,000, and then plus 5,000 here, minus 1,000 here, and plus here. Okay, so this one got closed by my stop loss, which I put into the profitable zone. So here I didn't manage to maintain this ratio of 4 to 1, risk to reward of 4 to 1, but it doesn't happen always. Yes, that's the reality of the markets. So so these two, they kind of like kill this one. So this profit overlaps these losses. Then I have minus 1.5 thousand and then plus 3,000. So with my recent trades, I made at least $1,500 of profits there, and plus these 5,000, so more or less $6,000+ with my recent trades. And there were also some small trades, had some losses before. So that's how it all goes. So you make a little bit of, you have a little bit of losses, and you cover up those losses with big winners. And now I have 3 active trades on forex. And so today what I want to do, I've actually moved my stop loss into the profitable area, so I will not, so here is my stop loss here, and I will not lose more than, I will I will make profit guaranteed, 100% guaranteed off of this trade, but I will not less, and I will not less, and I will not make less than 50% profits. So next is my trade here on the most popular asset in the world, which is the euro against the United States dollar. And last but not least, I have the pound, which I've been holding on since January the 26th. And well, you can also see my commissions. So commissions are not that big compared to my overall take profit here, or my better to say my current P&L. So yeah, I'm actually thinking like I put this take profit here. Maybe it's a little bit too optimistic, and I should actually close this trade somewhere around here. But anyways, what I want to do now is I'm going to move my take profit a little bit, or sorry, my stop loss a little bit closer to the current price. So at least, like say worst case scenario, this currency exchange rate goes up, and then I will not make less than $750. So that is it, guys. That's how Forex works. So Forex takes a little bit more patience. So you need to be more patient, you need to be more focused, and you need to work, you need to do more money management, so to say, because you need to manage your positions, you need to watch them, you need to check them out from time to time. So that is a very important thing to do, because many people neglect that, and that is why they just they treat Forex the same way they treat FTT, but that is a core mistake. So you cannot treat Forex the same way you treat FTT, because they have fundamentally different approaches. So with FTT, it doesn't matter how much your chart goes in your direction. Basically, it can be 1 pip, it can be 10 pips. Basically, you will always close with profit. But with Forex, it's a different mechanics, and then this risk-reward ratio starts plays a much more important role, because based on that, all your money management and portfolio management depends on that. So, guys, do you have any questions? Hey, good afternoon, says Mohammed. That's great. Can you please teach some good strategy? Yes, well, of course. We talk about strategies, and so we usually talk about strategies on Tuesday, Wednesday, Thursday, and Friday. So we have those days are dedicated specifically to uncovering different strategies and different signals on those strategies, and other things like that. So guys, let's move on. It's been okay. So Alex says something here interesting. It's been 3 years I started trading, still could not able to find a good strategy. Whoa, that is a little bit wait, okay, so let's find out. It's because I mean, I'm talking from my point of view, maybe from the experience. So I in the beginning I worked for this proprietary trading company, and we had basically the head of the office where I worked. He was also our trading coach or trading mentor, and that person basically taught us different strategies. And I mean, it just like why didn't you stick with one of the strategies? And I mean, so these strategies that I demonstrate in our trades, most of these most of the webinars that I do, they close with profits. So I'm like, why? I mean, like, how come you have not taken one of our strategies? It just seems a little bit strange. I don't know. It just seems a little bit weird to me, because I mean, like, we have so many different strategies, and maybe I would say the problem is that you sometimes wanna maybe find that strategy that works with, say, 70 or 80%, 90% all result, but that is a little bit too unrealistic, and maybe you should focus on something more realistic, like 55-60% profitable trades, and then with proper money management. So maybe you're like, because I've been talking, I'm pretty sure that you heard of this concept of the 3 pillars of successful trading, which are strategy, money management, and risk and psychology. So money management, risk management is pretty much the same thing. So once again, it's strategy, it's money management and risk management, and the last pillar of successful trading is psychology. So maybe you should focus on those other elements and not just this first one, the strategy. Because yes, of course, strategy is important, but oftentimes you can achieve your goals by following, maybe by like changing your money management strategy. I don't know. All right. Yeah. So here is a comment from you. I'm always losing when I use martingale and losing total capital. Would you suggest good tips how to make money management? Well, yes. See, martingale does not work for everyone, and it's not like this like universal cure for everyone or for all kinds of problems with money management. So martingale is just one of the options. We also have gradual increase of trades. So if you're like, say, if in the beginning of the day I have this amount, and if by the end I have less, or by the end of the week I have less in my account, it means that my strategy might be failing. So in this case, what I need to do, I need to reduce the amount of my trades to, for example, $1, and I need to get more practice. So before I get more practice, I will not increase, I will not go up in terms of the in terms of how much money I invest into every trade. See, that's this little different approach. Like, I only increase amounts of traded when I have profitable trades. So if my trades are not resulting in profits, I stop and I well, go back to, say, square one. I go to $1. So it's kind of hard to diagnose your trades because I don't see them and I don't see your statistics. But you can consult our financial specialists or our trading coaches, so to say, in the VIP department, and they can help you with that. I think, I'm pretty sure they will help you, because they will be able to have a thorough look at your trades, at your analysis, and yeah, from there they will probably be able to provide you with some real interesting insights about your trading. So all right, so a question from Mustafa about AUD NZD. Is that going to reverse? All right, let's do some analysis. So this asset has already broken under the 50 SMA, and the current trend is downtrend. For example, let's see what about, okay, so 20 SMA, yes. So I would say yes, probably it seems that this asset will be dropping and this might be a very good setup here. So see, basically you can maybe open a trade downwards already, but I would definitely wait for this support level to be broken, because as of now we are still uptrending, right? So we are still uptrending in AUD NZD. So well, it does look like a breakdown, and it does look like this trade, this currency pair couldn't break above the 200 SMA line on daily chart, on daily time frame. So it means that this asset is relatively weak. And this chart cannot really go up, but okay, there is also another. Yeah, so we are in this basically crossing of the two very strong levels of support, and I'm pretty sure that yes, it's a decisive moment here. So we either go up here on AUD and ZD, or we go down. So you can already open trades downwards, maybe with a very short stop loss. I do not recommend long or big stop loss, but then definitely once we break under this level, then yes, I would definitely start opening trades in the downwards direction. So guys, it's like this point where, so as of now, it still kind of looks like an uptrade because we are still like uptrending. And well, probably I mean, like, according to the laws of technical analysis, it's better to open a trade up here, not a trade down. So another paradigm of trading, of successful traders, is that they always want to trade what they see on the chart and not trying to kind of like predict what could have, should have, might happen in the future, because here we see this potential breakdown. And so why why opening a down trade when we are approaching a very strong level of support? So I would rather open an up trade, or if you if you don't want to open an up trade and you are still thinking that this asset has more, maybe some fundamental analysis. I don't know, like Australian dollar against the New Zealand dollar. I don't know about fundamental analysis there in that currency pair, but I would probably wait. So if you want to open a down trade, I would wait the actual breakdown to happen. Then I might wait for a pullback, and from here I will open a down trade, something like this. Where did I learn to trade? Asks Clinton here. Well, I've been trading for more than 10 years, guys, long time ago. And in the beginning, I was attending different classes, different courses. Pretty much, I was reading books. I was watching those very limited videos, because 12 years ago, YouTube was nothing like it is before, like it is today. There was a lack of there was a shortage of content. There wasn't people were still like some selling trading courses online. I mean, it was a total different story. It's so much different from what it is right now. And now we have overload of information. We sometimes don't know where to begin with. And but yeah, little by little, I would take something that worked, and then I would keep it, and something that didn't work, I will probably abandon, and then maybe I will return to the same concept of trading, to the same maybe approach or strategy or indicator sometime afterwards, and then I will double check it. So that's kind of like how I did it. It's all about practice, getting some feedback by the market. So the market constantly provides us with some feedback, and yeah, those are the kind of like the things that, yeah, I don't really see any other shortcut. I mean, if you manage to find a guru of trading or a professional trader that agrees actually to spend time with you and to teach you, because probably like personal coaching, when this person potentially can make money, so he should really have a lot of motivation, or should charge you a lot of money for like passing on this knowledge. But another option, guys, is like, once again, I remind you that if your current service level, so my current service level is, or my status service level, whatever it's called, is expert, and for example, I'm entitled to at least to up to 4 consultations per month with my financial analyst. And if you are an advanced trader with us, so then you're entitled to 1 consultation per month. So that's not much, but that's better than nothing, of course. And I strongly recommend, and I highly encourage you to actually do spend some time with our financial analyst, with our with our trading coaches, because they will like basically help you like progress much faster than on your own. All right. Hi Thomas, do I use martingale method a lot of times? It works, but at times it wipes out my account. How can I perfectly kick it? Because I realized I can't stay away from it. Well, with martingale, you have two options. Basically, you either need to have a lot of money in your account so that your account can sustain these drawbacks with martingale, or you need to start with very little amounts of money, like $1. And then option number 3 is to make sure that you don't have more than, say, 5, 6, 7 trades, 7 losing trades in a row, because all those losses happen when you have a long series of negative trades in a row. Because if your trades, if you have, and I mean, like now it's very convenient to see. So for example, here, see, it's profitable, red, green, red. Like I don't have long. Okay, maybe this one. Let's see. All right, so I had this 1, 2, 3, 4, 5, 1, 2, 3, 4. Was that 5, 6, 7? So 7 losing trades in a row. Yes, I also have losing sequences from time to time. It's trading, right? You cannot do anything about it. But that's probably the longest one that I ever had. So if I were to use martingale on the 7th step, so on the 8th, because my 8th trade was profitable, so I probably would have needed something like well, a pretty big amount of money. So martingale basically has its ups and downs, like any other money management or trading technique. So normally it helps you when you are not that experienced, and you cannot achieve a decisive win by opening trades of fixed amount of money. But at the same time, it can be very risky if your strategy, it's like sometimes you have a losing streak and sometimes you have a winning streak, and you need to make sure that you don't really have those streaks. It's better to have a few losing trades, a few winning trades, a few winning trades, and a few losing trades, but not like 7 profitable trades in a row, but then 7 or 8 losing trades in a row. And it all comes down to, once again, perfecting your strategy, perfecting your setups, and maybe another option that I might recommend would be to actually switch to Forex, maybe. So Forex has a different kind of money management, and you know you don't need to have like profitable sequences. Yeah. Okay. So there was another interesting question. So why 50% stop loss? Well, basically, I mean, like, why 50? So it means like, why not 20% and why not 70%? Well, it all depends. I came to this by trial and error. So I figured out that 20% is sometimes it's a little too little, because sometimes you just open a trade and then you have some news, you have some shadow, and you get kicked out of the trade, you lose this trade. So you need to have a little bit of like breathing room, extra space for that stop loss and for the actual chart. And then maybe 100 would be a little bit too much. And then I figured out that realistically, pretty often I can have these these trades actually close with 200% profit. So once again, it all comes down to your risk reward ratio. So if your risk in a trade, or if you're, okay, so we can do it backwards. What is my regular take profit? So 200%, it's realistic, but maybe 500% is a little bit too much, because the charts, they don't that often go like this. Like here there was a huge drop, and like one could make here, well, I don't know, like if you manage to stay in the trade for like 3 months, from October to December, like 2 months, then probably you would make like say 1000%, but that doesn't happen that often. More often we see a situation like this, that we have a form of sideways movement. So in this case, for like 200% is enough, and you don't have to be like overly greedy, because once you become greedy and you start moving your take profit, like yes, it might work, but then of course it's all about probability. So how often do your trades actually, how often can you make plus 500% off of a trade? So, and then you just start thinking about that. Do you trade Forex more often or FTT? Well, in fact, now I trade so many different kinds of assets. I trade FTT and I trade Forex. And I also have this portfolio of stocks. I also invest in cryptos. Basically, guys, when you start progressing, after you've, like usually everyone begins with some form of quick trading. It can be scalping on Forex. It can be scalping on stocks. For example, American stocks is a very popular direction. It can be day trading. It can be FTT. So it's something quick, because we all want to get some results very quickly. But then, as you progress, as you learn more and more and more, you eventually come to this realization that that big money is made actually in long term. And then you realize that it doesn't make sense. For example, you buy Tesla stock at $100 and you sell it at 150, and you're happy with that, with those $50 of profits. And then in a few months you regret that decision, because now Tesla is trading at $400, right? So eventually you come to this realization. We can all see this by chart, but it's like kind of like looking at it and actually feeling it are two different things. So eventually you need to we will all come to this realization if we stay in trading long enough. All right. So that's why, yes, I cannot really say that the percentage, like more volume or more time. Like, of course, by volume and by money, I invest more in stocks and cryptos, and also in Forex. And then FTT, I still trade FTT, but I don't trade it that much often because I've grown out of FTT mode of trading. So like I said, all these quick modes of trading, they are very good for beginners in the beginning, in the early stages of your career, in your trading career. So what is another question? Why you never live webinars in Indonesian language? At the moment, we don't have a person who speaks Indonesian who can do webinars in Indonesian. We are working in that direction, and hopefully within the upcoming few months, we will have a person like that. All right. Is it okay to ask whether you are a full-time trader or not? Well, it's difficult. It's kind of difficult to say. I wouldn't say I'm a full-time like trader, because I know people who are full-time traders. I have friends from this area of life, and they actually spend between 8 and 10 hours in front of their screens trading. I am not like that completely, because I work for OLYMP TRADE as an analyst, and I do long-term investments, but I also like working with the company, with OLYMP TRADE. So I wouldn't call myself a full-time trader, because I also have different kinds of investments, different kinds of like trading methods. And you can also invest in real estate, guys. So you get some money from trading, you reinvest it. You can, like, there are so many different things that you can actually invest into. Some companies, some startups. So like trading is just the tip of the iceberg. It's not everything. Like, there is much more down below the waterline, the surface. So all right, a question here from John. I usually use the RSI for signal generations in 2 minutes FTT. I have noticed the more jagged its lines, the more the failure rate. Example is today, what was happening and where can one be getting news? So as per news, probably your destination number one is investing.com. The easiest and the most accurate and yeah, just pretty much like everything you need to be a successful trader is here. Just check the economic calendar. We have so no releases today, and then on Tuesday we have a big portion of releases. So Japan GDP, the United States again, inflation data, and well, I wouldn't say this is the busiest week of the month. I'd say it's pretty moderate, but still we have a pretty many news coming from the United States. Now, so Thomas, you open forex trades based only on Fibonacci levels or any other technical analysis? Of course, not just on Fibonacci levels. I use fundamental stuff, fundamental ideas. I use. I mean, like one can use. I mean, like there are so many different kinds of. Okay, let's have another. Let's have a look here. So, why don't we apply Kind-Martin strategy? And daily time frame, and you're going to see how accurate actually this strategy is for forex. So for example, on daily we have just do some backwards testing and see how often this strategy results in profitable trades. So one can be using just this strategy will be more than enough for successful trading. Fibonacci levels, all our strategies, simple moving averages, the RSI, overbought, oversold, the news. There are so many different places or different sources or different like parts of trading where you can get signals. So just basically it's pretty much an endless variety of signals and everything. So I don't rely solely on the Fibonacci levels. I use all kinds of different tools. All right. So about the RSI indicator. So I would definitely I definitely want to recommend a strategy called triple rebound, which is basically based upon 3 RSIs. So we have 3 relative strength index indicators, and well, just find a webinar according to this strategy on our YouTube channel, and you will see. You're going to see I had a very interesting webinar a few weeks back, and I had something like 80% winning trades. So one of the most resultive strategies is the triple rebound strategy. So guys, I really recommend you using this strategy. It's a real. So this strategy is a real deal. All right. Next question here. Suppose my target plus 100% profit, but chart rise until 70%, then reverse downward. What should I do? Take profit or wait until hit target, because sometimes full reverse until 0. Yes, that is the most difficult part of trading, guys, actually, because oftentimes, yes, it does happen, and oftentimes there is no way to tell. So I try to minimize those risks by setting my stop loss towards 50%. Sometimes if I'm already making plus 136% of profits, I would probably put here 50%. So I still want to take some money from of this trade. So that will be my insurance for my next trades. But yes, that is the difficult one, and there actually is no consensus on that issue. Yeah, guys, I think the internet or something. Well, anyways, I think this will be it for today. We have done some analysis, and I have replied to a number of your questions, guys. So Please join our webinars. The next webinar will by me. I will do it on Wednesday, so feel free to join that webinar. And also check out our local YouTube channels. Just type in YouTube OLYMP TRADE and then Arabic or Brazil or any other language, and then you will find those webinars. All right, guys, I will be finishing the webinar. I think it's like really buffering or something, and I will see you next. I will see you next time on Wednesday.